Nvidia's highly anticipated earnings report is going to be released next week. The stock, though, down more than 4% this week. Its worst week since mid-April. Several other mega cap names also sliding over the past couple of days. Joining us right now, Paul Meeks, Freedom Capital Markets Managing Director. Good morning to you. Let's start with the Nvidia news, what you expect next week. Also, what you make of some of the news that we've been talking about just this past 24 hours about this H20 chip. And whether actually it's really going to be sold into China at this point. I think there's some real questions about that.
So first of all, I think the quarter will be another meet and beat. The only problem that I have, or the only cloud that I see, is, of course, what you've already talked about earlier in today's program, which is what's going to happen with China, right? We have the H20. It was on again, off again. We have this reverse tariff of 15% that should be charged or may be charged to both Nvidia and AMD. And now, of course, we have Nvidia in negotiations to sell one of their higher powered chips to China. Of course, what will the restrictions on export controls be there? So all this, unfortunately, is a question because it all gets into overall the big negotiations that continue now for an extended 90 days between the U.S. and China. I think they're going to finally strike a deal that is going to be the biggest of all big bundles, includes all this stuff, including other things like who is going to take control of TikTok here in the U.S.
You know, we had a conversation with Sarah Fryer from OpenAI this week where we said this is either a gold rush or a sugar rush. Sam Altman, just about a week ago, said that we were in a bubble. We may be in a bubble, Paul. Are we? And if we are, where in the cycle of the bubble are we so that if you want to get in or out, you know when?
Yeah. Well, we've heard the bubble fears for a long time, right? Remember earlier this year when DeepSeek out of China was out with their cheaper, supposedly more efficient model, and people were calling for peak AI back in early 2025. So yes, we're spending a lot. And yes, in any tech wave, you're always going to have a ending oversupply. But the way I look at it, when you talk about the timing, I still think that we're not close to the end. I still expect strong AI infrastructure building spending this year and even 2026. So I am not necessarily worried about the collapse anytime soon.
But is that a 2-year program? Is that a 5-year program in your mind? Because it also has to do with the multiples that are on these stocks.
Right. I actually think it's clear sailing, at least through next year. But when you take a look at some of these companies, a la, the flagship Nvidia, when you take a look at a PE to growth, sometimes you see companies of this ilk, this quality, with a PE to growth rate of less than 1, less than 1.5, clearly less than 2. So by that metric, they're not necessarily egregiously overvalued.
Of all the Mag 7, if you will, I don't know if you want to add some others into that, what do you like and what wouldn't you touch?
So I do not like Tesla, never have. I'm also a skeptic of Apple. I think the problem is no growth on the top line and also a squeeze on their costs as they manufacture more in the States. Every time Apple has an announcement about domestic manufacturing of some sort, shareholders should take that as a bad sign. I still like, among the Mag 7, Microsoft, though I think it's a little bit expensive. But I would buy here Meta and Alphabet and Amazon. But my favorite stock, Andrew, out of all the larger tech companies is AppLovin.
I still think of McLovin every time somebody says that, too. Explain AppLovin, why that's your favorite, but then also why those three. What'd you say, Meta? Forget about Microsoft, but the other three that you like the most in the Mag 7.
Well, I think there's upside in some of those other three or the subset of the three of the Mag 7 stocks. for a while, Alphabet had really lagged. It actually had lagged not only the Mag 7, but the S&P 500 before their last quarterly report, which I thought was pretty strong. And so I like that on a relative valuation basis. Amazon took that hit last quarter when their Amazon Web Services were a little bit disappointing, but I'll think they'll be fine. And Meta came under some pressure this week because they announced that they're going to at least stop paying this outrageous fees for AI talent. I don't necessarily think that means that the AI goose is cooked. So I still like those. But AppLovin, here's a company that's taking on a new market that has a huge opportunity. They only have a small fraction of it. So I like the potential for revenue growth acceleration. And also the company divested a lower margin business. And so they're left with a pure play in digital advertising with a EBITDA margin of well over 80%. So that is a rock star profile for profitability with accelerating growth with reasonable valuation. You don't see that in many tech companies these days.